Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin now is trading around 64,400 USD, below 18 Muri, and the 21 SMA under bearish pressure, and we could expect it to continue falling in the coming hours until it reaches the lower bound of the uptrend channel around 64k. If Bitcoin finds strong support around 64k, this zone could be considered as signal to open long positions, with short-term targets toward the upper bound of the uptrend channel, which coincides with the 28 Muri line and the 200 EMA. It's a purple line on the chart around 68,750 USD. Given that the Argyle indicator has reached overbought levels, we could expect bearish pressure to ease until the price reaches 64k. Around this zone, we could resume our bullish trades with a target at 70k. A decisive break below the uptrend channel and consolidation below 64k could change Bitcoin's outlook, and we could expect it to reach the 08 Muri level, around 62,000 USD, followed by the psychological level of 62,500 USD, and finally reach minus 18 Muri, around 59,385 USD. On the other hand, a breakout and consolidation above 65,553 USD could send BTC higher in the coming days, potentially reaching 68,000 USD. For this to happen, it would need to decisively break out of the narrow downtrend channel that has formed from the week highs. Our trading plan is to wait for Bitcoin to reach 63,000 USD to resume a bullish cycle, or to buy above 65,500 USD. Always managing risk and taking price action into account. On the daily timeframe, Ethereum remains firmly locked in a bearish trend structure. The key CHOCH level is now located at 2477, marking the latest lower high within the current downtrend. As long as Ethereum continues trading below that level, the broader bearish bias remains intact, and there is no technical basis for calling a trend reversal. Price recently reacted with only a minor deviation to the latest bearish fair value gap, a setup that closely mirrored the signal seen on Bitcoin. The alignment between the two largest cryptocurrencies provided additional confirmation that sellers remained in control. As a result, traders had a strong technical case for initiating short positions ahead of the most recent sell-off. The rejection from the bearish FEG combined with the intact bearish market structure offered a high probability continuation setup that ultimately played out as expected. For now, Ethereum continues to trade below key structural resistance, and the daily chart remains titled in favor of the bears until proven otherwise. On the 4-hour timeframe, Ethereum continues to trade within a bearish structure, which remains part of the broader downtrend visible on both the daily and weekly charts. At the moment, the market is showing only a modest corrective rebound. And while that recovery could extend further, there is still little evidence of a meaningful shift in trend. The most recent bullish fair value gap did generate a reaction. But as the price action shows, the bounce has been relatively weak. That's a classic characteristics of a bearish market. Sharp declines by followed sluggish and limited recoveries. In other words, sellers continue to dominate the broader picture, while buyers have so far failed to generate enough momentum to challenge key resistance levels. As a result, traders may consider tactical long positions when fresh bullish patterns or setups emerged on the 4-hour chart. However, these trades should be viewed as short-term counter-trend opportunities rather than the beginning of a larger bullish move. The prevailing trend remains bearish, and Ethereum could resume its decline at any time as long as the higher timeframe structure stays intact. Until the market starts producing stronger bullish signals and reclaiming key structural levels, rallies are likely to be treated as corrective moves within a broader downtrend. That's all for today. See you online soon, and good luck.